Hello everybody, in this video I'll be discussing 5 stocks with very high risks, but also the possibility for very high rewards. Virgin Galactic offers tourist flights to near space. Most of the space industry's revenue comes from satellite manufacturing and launching, but space tourism is expected to grow, with some estimates showing $1 trillion in revenue by 2040. In addition to space tourism, Virgin Galactic is focusing on point-to-point hypersonic travel. Hypersonic travel is when planes fly up to 5 times the speed of sound at high altitudes. This technology could generate significant revenue in the future. These future possibilities are amazing, but currently Virgin Galactic is burning through cash and they have several competitors in the space tourism industry. One competitor is Jeff Bezos' Blue Origin, which has already taken paying customers into suborbital flights. Virgin Galactic faces cash burn, delayed operations, and competition, but it currently has $1.2 billion in cash and liquid assets. These assets give Virgin Galactic enough runway to maintain operations until the commercial flights start. This stock was also very popular with retail investors. If supply chain and economic issues subside and Virgin Galactic starts regular flights with paying customers, they might eventually see a path to profitability, which could make the stock price actually go to the moon. So is Virgin Galactic stock a buy for me? In full disclosure, I own 200 shares that were assigned to me from options trading, but I do not plan on buying any more shares at this time. Palantir is a software company that focuses on big data analytics. Its software helps organize data to make decisions and solve complex problems. It builds software that is used by both government and private sectors, but the majority of Palantir's revenue comes from contracts they have with governments around the world. The government sector growth has slowed, but the company is working to diversify its business into more private sector companies as demand for artificial intelligence grows. Palantir is a long-term growth stock that has been hit hard by the market downturn. Palantir's earnings have missed Wall Street's expectations, and it doesn't look like it's going to get better in the near term. Some risks include the dependency that Palantir has on government contracts, as well as the increase in competition that appears to be developing in this industry. It will take some time for revenue growth from new customers to be reflected, but the future does appear to be bright for this company. So am I buying Palantir stock? I currently don't own any shares of Palantir, but I am planning on buying this stock and building a position in this company. NIO is a Chinese company that designs, develops, and manufactures smart electric vehicles. NIO appears to offer an amazing growth tech business at a cheap price, but is it worth the risk? Most popular Chinese stocks have been hammered down 50 to 70%. Over the past year, NIO's 52-week high stock price was $55 and its recent 52-week low was $11.67. NIO is currently trading for around $22. So what is the risk of owning Chinese stocks? Well, first and foremost, it's that China is a communist country where the government can and often does make laws that limit the power of these big companies. Geopolitical tensions is also a risk. If China and Taiwan were to have a war, massive economic sanctions would likely follow. Sanctions on China would have massive economic effects on the entire world. China is the world's second largest economy, and the United States relies on China much more than we do Russia. And then there's the biggest risk of all, that the United States may delist Chinese stocks from our American stock exchanges. In the future, the Securities and Exchange Commission will have the power to delist companies from US exchanges due to non-compliance with auditing rules. The delisting would force massive sell-offs that would punish both retail and institutional investors who own Chinese stocks. NIO appears to have a great product and has been working to expand their cars into other countries. It is not yet possible to buy NIO cars in the United States, but the company has announced plans to expand services to 25 new countries and regions by 2025, including Australia, Western Europe, and the United States. The US branch of NIO also recently signed a 10-year lease on a building in San Jose, California. So am I going to buy NIO stock? For me, the answer is no. Although they appear to have a great product, the risk of owning Chinese stocks appears to be much higher than the reward for me. Honest is a California-based, Jessica Alba-backed sustainable products company. The type of sustainable products are focused on consumer goods like personal care, baby, and household products. The company focuses on leading the clean lifestyle movement and creating a community for the conscious customer. One of the main risks with Honest stock is that it's in a highly competitive sector with companies such as Procter & Gamble and Kimberly-Clark already dominating this space. Honest does a great job of differentiating itself from its competitors by focusing on clean, sustainable products, which the trend appears to be moving toward. and also by using their spokesman Jessica Alba to promote the products. Honest's clean lifestyle and message resonates with a certain type of customer base that appears to be growing. Despite supply chain and other issues affecting Honest, the company is expected to become profitable in 2023. If this trend proves true and the clean product movement continues to grow in popularity, this could make Honest a very worthy investment. So is Honest stock a buy for me? And the answer is yes. I own some shares and plan to continually buy this stock throughout the year. Oatly is a company that produces dairy alternatives using oats. Oat milk is increasing in popularity. Many coffee drinkers use oat milk now, especially people who are lactose intolerant or have some sensitivities to dairy. They also use oat milk to make ice cream, and I've tried it. It's actually not too bad. It's environmentally friendly to create. And oat milk froths and mixes well with coffee, unlike many other dairy alternatives. Oatly is now available in 179,000 retail and food service locations globally. The company also has products in 7 food categories and is seeing revenue growth in all these new categories across its core commercial markets. Oatly expects revenue of $880 million to $920 million for fiscal year 2022. This should be year-over-year growth of around 37 to 43%. With Oatly's expected growth and the continued popularity of these dairy alternatives, I think this company has a lot of upside. I see Oatly with a lot of potential to grow as its customer base continues to expand and revenue increases. I am a buyer of Oatly stock. Thank you all so much for watching. I'd love to hear what your thoughts are about these stocks in the comments. And also, if you have any high risk, high reward stocks you're tracking, please let me know. In addition to high risk, high reward stocks, I've been buying some blue chip dividend stocks, which I talk about in this video here. Thank you all so much for watching. Hope you're all doing well. Take care, and I will see you next time.